What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did get another cool down period with most of the indices pulling back or going sideways. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down about 0.25%, but we still have bullish price action and bullish trend. The price action's above all of our moving averages and we still have a strong bull trend, so this is really just a cool down period, which we do expect to see below the previous all-time high of resistance. So don't forget, we are going into OPEX, so we could just see the market continue to cool down and go sideways before breaking out, but I do expect to see the market trying to break out to a new all-time high. So on the breakout, you're looking for a close above 471 and our next price target up there at 477. Now don't forget, there's still the possibility in this bull market that we do come down and test our 20 simple moving average as support, and we have not yet hit that level, which is now going to be right around 463. So like I continue to say, the critical support each and every day continues to climb with the positive slope, and that will help push price action higher, which will help SPY get to that new all-time high. So look for that critical support level to be right around 463, and if we do break below that level, you will need to be a lot more cautious because we could be coming back down to our 50 EMA, which is right around 453. Right now, I expect to see this bull market holding up above the 20 simple moving average, and I do expect to see a new all-time high as early as next week or possibly by month end. So right now the market still looks very bullish, so stay on the bull and stay objective, and the price action and the trend are still bullish. We see down here at the volume that there's no high volume selling, so there's nobody dumping their positions that is of any worth that's going to move the market. Remember that we don't panic sell just because the market's going lower or pulling back. We stay objective and we watch the price action, and right now the price action is telling us that the market wants to go higher. If something shifts and we start going lower on increasing volume, we'll get a lot more cautious and plan accordingly, but right now we just don't see that. On the Nasdaq 100 triple Qs, we were relatively flat on the day, only going up 0.05%, but again, the price action is still bullish and we still have the strong bull trend. Our critical support is our 20 simple moving average, which is right around 389, and it's continuing to rise each and every day, so it's going to be into the 390s in the very near future. If we test our 20 simple moving average as support, it could be a potential double bottom, and I do expect to see that level holding up. If we close below about 388, you're looking for the 50 EMA down here right around 380, but again, I don't necessarily expect to go that low. To the upside, you're looking for a breakout above about 399 to 401 to get to our next price target just below 410. Checking in on the volume, we can see that we're going absolutely nowhere on low volume, which means the bulls still have the advantage, because when you get a low volume market, it favors the bulls to take the stairs up. You need a high volume selling to get the elevator down, and we just don't see that on the triple Qs. So watch those critical support levels right around 394, 392, and 390 to continue to hold up as support as we see the triple Qs try to break out for that next leg higher. On the Dow Jones, we were down just over 0.5% today, and we're back to our critical support level at the 20 simple moving average, which is right around 360. So the Dow Jones is trailblazing for the rest of the indices, and we're going to see if the Dow Jones can bounce from here. We're on critical support and we have a bull trend, so we do expect to see the Dow Jones bouncing off of this support level and attempting to break out to a new all-time high. So look for the Dow to potentially bounce off 360, retest 365, and on a break above 365, we should start running to that next price target at 372. If for whatever reason we close below 360 and break this critical support level, you're looking for the next critical support down here at the 50 EMA, which is going to be at 355. With the strong bull trend and sitting on top of critical support, you have to give all of the benefit to the bulls who are in full control of this market, and the bears would need to reclaim this support level by breaking down through it, showing that level is a resistance level, and then rejecting that resistance and continuing to head lower. Until the bears can prove it, you want to stay bullish on this market. On the Russell 2000, we were down about 1.31%, and we see the Russell 2000 also coming back down to our critical support, which is right around 235, which is our 20 simple moving average. We still have the bull trend, and we're very close to our critical support level, so you're going to see very soon if this market's going to remain bullish. The Dow Jones and the Russell 2000 are testing critical support and maintaining the bull trend, so if they're going to bounce, they're going to bounce from here. Just like we saw last time the Russell 2000 was down here around the 20 simple moving average, and we did have the full bull trend, we were also sitting right on top of the 50 EMA, and we did get a very impulsive bull rally off of that support level. So when you have a bullish trend and you're sitting on top of critical support, you do want to be a lot more bullish, and you're sitting right on top of your risk level. If you buy at this level and you're wrong, you could take a small loss before you get to the next critical support. But if you're right and you start breaking out above about 238, then you have a great risk reward setup and you literally bought at your risk level. So if you're buying at this level, you have a great risk reward to get to new all-time highs and a very strong support level, knowing that if you break this level, you're coming back down to the 50 EMA right around 230. So I still like the Russell 2000 at this level, sitting on top of support and holding the bull trend for that next leg higher at 245 to 250. Yes, we can go higher than 250, but let's play it day by day and let's get through some of these price targets before we continue to look higher. You need to see that breakout above about 238 to get to that next price target. On the Arkk ETF, we were down 1.85% today and we're back below the 50 EMA, and we are back below all the moving averages with the price action, but we're still looking for this potential inverse head and shoulders pattern. Just to summarize, we're forming the right shoulder right now that will validate when we break out above 126, and that will give us a price target on the Arkk ETF at 143. So on a break above 126, we're looking for a price target at 143. Otherwise, we're looking for a continuation of this dip to get down to these support levels at 115, the gap close at 113, or the previous low at 110. If we break down below 107, this is invalidated and we're going for another leg lower, and there's no longer a bullish inverse head and shoulders pattern. So look for these critical support levels and the critical breakout above 126, and that's how you should be trading Arkk at this time. On the VIX, we were up 4.5%, so we're definitely seeing the VIX creeping up as the market cools down as we head into OPX, which is completely normal and completely expected. Remember, as long as the VIX is staying below 18.2, you need to buy the dip, and if the VIX closes above 20, you need to be a lot more cautious of a deeper correction. Right now, I don't expect to see the VIX closing above 20, but it could spike into that 21 range to close the gap, and then I would expect to see the VIX quickly bleeding back out and closing below 20 as we maintain the bull trend. However, if I'm wrong, you're going to see the VIX closing above 20 and continuing to climb, and we will see this market start spinning out of control and heading much lower. Right now, I don't see that happening, but pay attention for all scenarios so that you're always prepared for anything that could possibly happen. On Bitcoin, we're currently down about 0.4%, and we're still holding up above that critical support at 59,000 and staying above our 50 EMA. We're losing the bull trend in the short term, but we can quickly regain that back if we do bounce from here and break out to a new all-time high. So remember, if Bitcoin breaks down below 59,000, you want to get a lot more cautious because we could be coming back down to about 53,000. That doesn't make Bitcoin bearish, it just means it's going through a longer sideways consolidation before it goes for that next leg higher. Overall, I'm still bullish on Bitcoin, and I do think we will see that price target at 75,000 met this year. We could even exceed that target and get to the next price target at 86,500, but let's take it day by day and not look too far ahead. So right now, I think on Bitcoin, you can buy the dip at 59,000, and if we break below that, you want to try to buy the dip off of 53,000. Again, if we break back above 67,000, it should be a quick trip to 75,000, and that would be your next critical resistance. So right now, watch those critical support levels and continue to take it day by day, and do understand that we are going down on increasing volume. So if you start to see the volume increasing and spiking out of control, just be a lot more cautious. On Amazon stock, we were up about 0.25% today, and we still can't close above that resistance at 35.52. Remember, that is a strong resistance level, and the breakout level will be above 36.05, and then we should start running into the 3700s. To the downside, we have a ton of support right around 35.30, 3500, 34.52, and right around 34.20. If we break below 3400, be cautious because we could be coming back down to 33.11. Otherwise, buy the dip off of any of these support levels and get ready for that next leg higher into the 3700s. On Tesla stock, we were up 3.25% today, and we did close back above our 20 simple moving average, and we are starting to regain the bull trend. So that critical support level at 987 is holding up. So as long as we're above that level, you can stay bullish. If we close back below about 1050 yet again, then you want to be a lot more cautious because we're more than likely going to break that support and come back down to the 50 EMA, which is now sitting right around 945. Below that, you're looking for the full gap close at 911 and a retest of the breakout at 900. I don't think we'll go any lower than 900 right now, so that would be your critical support. But remember, you would need to break below our 50 EMA, which is also a critical support before you ever got there. Right now, it looks like the bulls are back in control, so don't forget about that gap close above at 1208 because that will be the price target in the short term. There's still the possibility that we close that gap and then just continue to bull flag and consolidate and eat time off the clock to burn up option premiums for both the bears and the bulls. So don't get overly bullish once that gap closed because we could be more than likely doing another round trip back down to support and then ping pong around until we can eventually break out and either break out to the bull direction and start heading towards 1400, or we're going to see a bearish breakdown and we're eventually going to close these gaps below. So follow the price action, and right now the price action is in favor of the bulls. So on Tesla stock, I think you need to stay bullish above 1050. On Apple stock, we did get the bullish breakout today, going up 1.65% and blasting right through that resistance breakout level at 152. We're back to having the full bull trend, and we did hold up off of that critical support. So again, with Apple being a market moving stock and breaking out on increasing volume, it's hard to get overly bearish on this market. It's a strong bull market, and we're seeing a lot of the market moving stocks breaking out and continue to make new highs. So just as expected, it looks like Apple does want to make a new all-time high, but it will need to break out above 157 to do so. So look for that next resistance level at 157, and above that, our price target is a new all-time high at 162. To the downside, you're now going to have support right around 152 and our 20 simple moving average at 150, and we really could just start to run from here and see a very impulsive rally straight to 157. Off of 157, we could form a little bit of a cup and handle before we break out and go to that new all-time high at 162, and that could easily take us out into December before we see the stock market start to get a lot weaker as Apple starts to pull back. But right now we have the full bull trend with bullish price action and breaking out increasing volume, so Apple is definitely full bull. On the financial sector, we were down just over 1%, and it does look like we're coming back down to the 50 EMA and losing the bull trend. That should be a great buying opportunity as long as that support level does hold up. On the industrial sector, we were down 0.6% today, and we're still holding on to the bull trend even though the price action is breaking back below the 5 EMA. This still just looks like consolidation before another leg higher. On the healthcare sector, we were up 0.14% today with bullish price action and bullish trend, and it does look like the healthcare sector is getting ready to break out of this consolidation. On the energy sector, we were down 1.53% today and back below our 20 sample moving average. It looks like we're still stuck in this sideways consolidation, and we could break out to either direction. To the downside, look for a retest of the 50 EMA, and to the upside, look for another leg higher. So jumping back over the S&P 500, we can definitely see the market is starting to consolidate some of its newfound gains, but we're seeing it doing it with bullish price action and trend, so it's still a buying opportunity. Remember, we need to see high volume selling and breaking of critical support levels, and right now we will see a sneak peek at what the market wants to do in the Dow Jones and the Russell 2000. If we see those ETFs rolling over and breaking below critical support, then we can start to draw more conclusions about the rest of the market. But right now the bulls are still in full control, and they have all of the support levels in the world to work with a very strong bull trend. You need to stay objective, which means you need to stay bullish, because you can't look at this market and be anything other than bullish at this time. The price action and trend are just screaming bullish, so there's no reason to try to call a top, and there's no reason to try to front load a short position when we still look like we could go for another leg higher. Also, don't forget that I am running a Black Friday deal on Bank Trade Alerts, which is an algorithm driven trade alert service that only trades TQQQs, and you can currently get 67% off your first month if you use the coupon code Black Friday at checkout. All of the details will be in the description below, so if you're interested in trying out Bank Trade Alerts, now is the best time to do that. You can find out how to join and all of the details by clicking on the links below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.